Good day, trader. My name is Wasku Smart. I'm the representative for Wasku Smart FX. Yeah. So today, um, the video is all about the intraday analysis. So today's topic is Euro USD February 20 intraday analysis. So we're just going to break down the whole market mechanics and their liquidity drivers on the intraday analysis. So follow me as I'm going to start. Yeah, and there's a word of a wise man, a very great man in FX in the forex market that said trade the liquidity and you see your whole game change. Yeah, you see everything change when you start trading liquidity. And according to ICT, he said there are two types of bank that trade in the intraday market. He said there's one, the interbank and the central bank. So he said the interbank has no pattern and they just trade liquidity to liquidity. So any moment you focus on liquidity more in this market, you have 60% of winning or even 70% of winning because there's a bank that regulates liquidity spots. So if you are going to follow the interbank to trade, then you need to be a man that spot out liquidity. So today example is just intraday analysis on Euro USD February 20. So there's two types of major section that you can trade, both New York and London section. So London comes before New York, as you all know. So and the strategies or the mechanics of the way markets deliver the price is very simple. If if you don't see the whole thing structuring itself in the London section, then you need to wait or you need to stop your trading. You need to wait till New York section to see. And that major thing else again is that there's a Q zone. So the London and the New York, there's always a Q zone between those two sections. For the London section, the Q zone is 2 o'clock New York time to 5 o'clock New York time. So that's the London section Q zone. So for the New York section, the Q zone is 8 o'clock a.m. New York time to 11 o'clock in the morning New York time also. So those are the two major time Q zone that markets make their most turn up almost like the patterns, their drives, their liquidity drives. They make everything comes in this um, Q zone. So let's get started. This is the chart here, Euro USD 15 minutes. So then the other thing you need to know is that if you are trading on intraday analytics, you make your analysis from 4 hours. You make 4 hours and a POI. When you trade on 1 hour, you break down to 15 minutes, but you base yourself on 15 minutes the most. So if you are trading on intraday, you focus on 15 minutes. That's where you are. So and you need to bring it down to 5 minutes, 3 minutes. Sometimes when necessary, you can enter 1 minute. But I don't advise 1 minute here. So I can stop at 3 minutes for you. So I think so. Let's get started now. So this is the chart here. Euro USD doing nothing. Looking at wow, it's not doing anything. So this is where February 20 started from. This is the opening of the price. That's on Monday. So from here to here, now this is 2 o'clock London New York time, which means that the London Q zone started. So the whole trade from here is in Asian section. So you don't want to trade the exact section, or you don't want to trade something outside the Q zone, the London Q zone. So now this is how the patterns works. Whenever you are on a bearish day, you need to see the market taking out the liquidity above the Asian high. So this is the Asian high here, and I'm expecting a bearish market. Yeah, I do the analysis on my Telegram group, and I give a lot of people they saw it. So did the Asian buy stop here. So when the market rallies up doing the market rallies up doing the Q zone, and it takes out the Asian high, which is the Asian buy stop, then I want to see some kind of moves. Then the second thing is I'm going to spot out the Asian sell stop too. So these are where liquidity can precise or can stay on. So now I spot out the Asian buy stop and the Asian sell stop. So I'm expecting market to be in this region based on my 1 hour analytics, because I have where market should be. So that's where I'm looking at. So that's why I said okay, let this market be. So that's my analysis on 1 hour. How I want market to be a seller, like I want the market to be in a bearish movement. So the moment the market broke this, now it's looking like it's not doing anything. Then I'll go to 3 minutes straight. Okay, so this is the 3 minutes. the Asian buy stop and the Asian sell stop. So now I saw the market here, it breaks it below here. There's a break of market structure here. So there's a break of market structure here. So I saw the market broke and the market was rallying up. So which means this here starts as another block. So here's another block, and I want to see the shorts here. From here now, I want to see the shorts here rallying into the, yeah, so 15 minutes. So okay, so this is 15 minutes here. So I want to see the shorts here rallying into the zone here I'm looking at um at 15 minutes, 1 hour POI. I was looking at the zone here. I was expecting markets to enter into this block here, but because this block here has a long wick, so I will prefer it taking the one that has a larger wick and a larger body than wick. Sometimes you have to trade cautiously. The one that has a body than the wick is more significant than the one that has a wick than body. So you take the one that has a body than the wick. So I want market to enter into these zones here. So that's why I put my take profit. So when the market rally here, the market rally down there, it rallies down there. You can see the London Q zone here from here to here. So the market rallies down. Don't forget I entered this trade from 3 minutes. Here I put my stop loss above just 9.8 pips. So the market rallies down here, and if you see again, there is a break of market structure here. There's a break of this is the Asian sell stop. Why? I'm going to take out the Asian section because I'm looking at the sell to this zone here. So this is the entry for 3 minutes. So now the market now take out the liquidity on the Asian buy stop, then it breaks this low here. So taking it as a break of market structure. So I found another POI here. So a new POI. So I'm having a new POI here. This whole candlestick is a new POI because it's a proportion block. So proportion block it traded inside the other block here. So another new entry here. So I'll be having a new entry here. So which is sell. So I'm having a new entry, putting my stop loss and move it. So taking the take profit with this zone. So I entered this on 3 minutes, having risk reward ratio 4.7. So let's see how this guy traded. And so this second one is risk reward ratio 3 points. So it's not more. So you can see it here, Euro USD sell now. So this is Euro USD sell now. You can see it here. Let me open it. Yeah, see the whole structure before it happens. So this is when market enter into this. So I was expecting the sell now. So the zone I was showing you here, the candle here is having a bigger body than the wick. This one is not. So I was looking at this line here, looking at the zone for market to just be inside it. The equilibrium of this candlestick is my target. So that's why I was looking at Euro USD sell now. So and it really sells, and you can see the whole movement. So this is just 42, that's 3.38 risk reward ratio. Thank you. So you can subscribe, follow me for more videos like this. I'm going to also scratch down the whole intraday analysis. So